In this video, we're going to be going over the simple liquidity concept that changed my entire trading career. If you apply this to your own trading, you will become consistently profitable. Now, this concept that I'm talking about is simply a sweep of the session highs and the session lows. Now, when we're talking about liquidity, there's all these different types of liquidity that we can be going over. You have previous day high, previous day low, you have 4 hour, you have 15 minute. There's literally liquidity everywhere. And a lot of beginner traders get confused by this and just draw them all over the chart. But when you simplify it down and focus on one specific area of liquidity getting taken out before you getting inside of your trade, you're gonna be more likely to become profitable. In trading, simplicity matters more than complication. You have to simplify into something repeatable that actually works. So if you see right here, I have marked off Asia and London. So session-based liquidity is important because during a particular session, which are the three sessions we have are Asia, London, New York, during one of the sessions, there are orders trapped above the highs and also the lows of that session. They become a powerful magnet for price to come back to later on in the day and test if the orders or buyers or sellers are still there inside of the market. So in this example I have right here, we have Asia high marked off and Asia low marked off. We also have London high marked off and London low marked off. So during New York, later on in the day at around 9:45, what do we see? We see a sweep of both the Asia and London low in the direction that we wanted to go inside of the first place. So once we see this sweep, we get in, stop loss right under below the lows, and we hold for an entire 1 to 5. Liquidity sweeps are very powerful if you get them right, because once price sweeps a particular area, you can really get a very good risk to reward, because if the sweep is actually correct, price should act as a magnet and bounce to the next area that it wants to go to. Now I'm going to go over another example for you guys. So right here we have Asia. It's Asia high, Asia low. If we look at the overall trend in the market, incredibly bullish on the Dow because of fundamental reasons and also just market structure as well. Orders are just bullish, so I would not be looking for sells inside of this situation. So during Asia, we see that Asia was in consolidation, orders below the highs and the lows. During London specifically, London opened at 3 o'clock. We see straight manipulation of Asia low, which was in already consolidation. The reason why I say London first hour is because we only want to be looking for liquidity sweeps during the first hour of the session opening or the first 1 hour 30 minutes, around an hour. Because if you really think about price, when do you think there is the most imbalance, the most volatility, the most people available to trade? When do you think price is going to make its biggest move? It's going to make its biggest move at the session opening. You have all these people who need to put money inside of the market. It's a real reason for price to actually move. So we wait for that first hour opening before getting inside this trade, putting our stop loss right below where price has swept, waiting for that change in character, and holding for a 1 to 5. Now, there are other confluences you could use with this strategy to make it more high probable, or we could just simplify it and you could create like a B plus version of it where you're catching setups almost every single day. So we see the manipulation this time of Asia inside of London, and then price just skyrockets. Here we have yet another example of this going on, where we have Asia high and Asia low, and then London opens up again. We sweep below Asia low, can't make this up, and we go straight for the high. So one thing that I like to see is that we do not sweep the highs before we sweep the lows, because if we already sweep the highs, that means we already took that liquidity. So I like for us to take the lows out, fake like we're going lower, catch more buyers, and then go where we want to go. If you are not waking up early enough to trade London, I would say wait for manipulation or continuation during New York. So what do I mean by a lot of the times price will do one or two things. One, it will either manipulate London again, London low, or if you trade another model, price usually has a short pullback during Wall Street open into a overall continuation. So that's also something you can trade. Same thing here. We see that we manipulate in London. During New York, we see a slight pullback right here, and then we see the move higher. This creates our whole entire cycle, which is what I'm going to get into next. A lot of people wonder why so many ICT traders or smart money concept traders talk about the one concept of accumulation, manipulation, and distribution. To me, that is one of ICT's best concepts and one of the most easiest for me to actually understand looking back now. A lot of people know the power of three: accumulation, manipulation, and distribution. Accumulation is a consolidation. Manipulation is the sweep of that consolidation, and distribution is a continuation. Very simple terms, very similar to Wyckoff theory, which was made more than 100 years ago on how the markets actually operate. AMD is very powerful because it is how the markets actually move from liquidity pool to liquidity pool. It's not just a strategy, it's actually how markets actually move. And I can't make this up, honestly. Even some of the pros that trade on Wall Street, some of the pros who trade at these big hedge firms, they haven't said AMD, of course. They haven't said accumulation, manipulation, distribution, but they have explained it in a way that, oh yeah, the market actually liquidity pool liquidity in this fashion. So anyways, what we can see that Asia most of the time is our accumulation area, and then London or New York is our manipulation into the overall trend of day. And we can see this happening almost every day, where Asia is that accumulation of orders, and then London or New York is the manipulation into the continuation of the day. Sometimes when we see a manipulation in London, though, we know that for New York, we are going to have maybe a slight pullback, but overall continuation because of the manipulation has already occurred the day. So sometimes if you trade London already and you get a liquidity sweep of Asia, a lot of times you'll be right about the manip of the day. And if you trade New York, you could literally just wait for a pullback a lot of the times at around 8:30. And if you see a continuation after that pullback, you're probably going to be right continuation over the overall day. This is mainly on the Dow Jones, though. Every single asset moves differently. I do like trading the Dow a lot more because it moves a little bit smoother in terms of this process. But you'll see the same type of price action happen on every single asset every single day. Some days, though, we get a double sweep, which is what I really like. This is my favorite type of liquidity sweep to have. So we see that Asia is in consolidation. London is also in New York. We get a sweep below both London and also Asia at the same exact time. That creates a very high probability. But as you guys can see here, we just didn't sweep. We tapped into this gap over here, rejected all the way higher. Last thing I want to say is that if you struggle with being specific inside of your price action zones, sometimes traders, even like me, I used to trade a little bit too much, especially during these patterns of the month. I get too many setups. I get inside too many setups and end up trading too much. And now my PN, I feel like I'm trading too much and I'm not trading the proper setups I should be trading. But with this whole entire framework, you just need to wait for 1 to 2 things to happen per day for you to get inside of the trade. So let's say we have a rule book that we can create for us before we get inside the trade. If those 2 or 3 specific things don't happen, then we do not trade. These are 3 easy rules that we can follow today that if you follow, you will start seeing tremendous results, because these are very specific things that happen almost every single day in a different fashion. So number 1, we wait for the Asia sweep inside of London or New York. If swept in London, we just get in. If swept in New York as well, I should add that we just get in too. And then 3, if swept in New York, we either wait as well for a continuation or another sweep. Like I said, if price looks like it's just gonna continue, then we just get inside the continuation because the overall sweep of Asia has already happened. But if we haven't swept Asia, we are probably going to sweep again below London and Asia at the same time like we did on this day. So after that, we would get inside of the trade and hold for longer. Literally, we are just playing with what we see from price. That's all we're doing every single day in the markets. We're looking at the cycle. We're looking at which cycle is most likely to play out, and then we're getting in based off of that, because the same three things happens almost every single day because it's the way in which price moves. Now, this strategy also works for options for specific stocks, but in a different way, because in stocks we don't have Asia, London, and all of that. We just have the pre-market. So during the pre-market session, during the main session, which opens up at 8:30, I wait for a sweep of the pre-market lows, but in a different way. So with options, I don't really care if it sweeps the high before it sweeps the low, just because options are just a little bit different to me. So I just wait for an overall sweep of the lows in the direction that I want to go. And we could see this day on some Verizon that happened yesterday. I almost did take this trade and cash out. We saw this sweep happen right here. Could have held. That's an instant 1 to 5 on this trade. So in options, we can do the same thing by utilizing the pre-market as a range and waiting for the sweep of that range before we get in, target higher prices. Honestly, simplifying my trading like this, like I said, this one liquidity concept, once I start seeing price through the lens of liquidity and not just maybe candlestick patterns, supply and demand, they all work, but seeing it through this lens of liquidity and where liquidity want to be tapped into and go to, very, very important and very, very crucial to my overall trading. One thing I'm going to implement in the future is getting a heat map. Heat map is very important because it shows on the chart, not on the chart, but like it shows on a specific chart where liquidity is actually resting at on the heat map. So I actually know that there are orders below Asia or London and can see price tapping into that area, rejecting, and in the direction that it wants to go. That's something I'm gonna get later on. So anyways, I hope you guys enjoyed this video, and if you guys have any questions, hit me up in the comments and I'll make sure to